Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment, so let's bring in our next guest, and that's going to be Megan Brantley. She's the Vice President of Research at Likefolio. Welcome back to the show, Megan. Good to see you again.
Thanks. It's good to see you, Tom. I'm excited to be back.
Awesome. So we're talking DocuSign. They got earnings after the close. This company's underperformed. Last quarter, double-digit subscriber growth. They've got over 1 billion users worldwide, but only, I think, about 1.5 million actually pay for their services. But Kevin and I always talk about this. This is a game changer type of technology where I don't have to go through papers. I can do signings of everything from a law office to real estate transactions through this product. What kind of data are you seeing? Because investors are not too keen on this stock at this point.
Yeah, so whenever you think about DocuSign, obviously they're most well known for this e-signature solution that they have. And this was a company that experienced tremendous growth during the pandemic, especially as businesses digitized, as you mentioned. And so now we're seeing that growth continue to slow. I think for perspective, the revenue growth in 2021 was around 50%. This year it's expected to be around 19%. And we're seeing considerate, just a slowdown in the pace of that growth. And even last quarter, after they put out a nice beat, shares have given back a lot of those gains. This suggests to us that, expectations are still pretty high. Investors still want to see that growth. So whenever we look at this, we say, okay, what do our metrics point to? Are they continuing to expand, especially as they lean into some of these, hype words like AI, whenever, they start to adopt some of these technologies to improve their products. So the first place that we can look are these web visits. And when we look at traffic to DocuSign's website, we see that the traffic is down by about 11% year over year. So this kind of suggests a slowdown in expansion. Another sign of this is when we look at just usage mentions of people who are talking about using DocuSign, those to us look a bit flat year over year. This further supports that data point that, we do see a continued just slowdown in growth for DocuSign, which may not be well received. And I think another point that we can look at is those consumer happiness levels. And while DocuSign's consumer happiness levels is decent, it's around 70% positive. I think we're about 69% right now. It finds itself in the middle of the pack versus other competent competitors. We're not looking at up-and-comers whenever you're talking about potential competition for DocuSign. We're talking about Adobe, which is a tech giant and has proven that it's very good at things like this. So I think that this is just a little bit cautionary for us in our data that we're not seeing signs of improvement in that growth rate.
Yeah, Megan, e-signatures of what DocuSign has about 70% market share in. It's like electric windows in your car. Once you have it, you don't go back to the other way. You can't go back to rolling up the window. This is the future of documents in real estate and in doctor's offices and all these things. But Megan, how threatening is Adobe to this company? I mean, they seem to have the real high profile name, but Adobe's going to compete. They're a huge company. And then Dropbox doesn't look like they're competing very much. Who's the real competition out there for them? And can Adobe overtake them?
I think that Adobe, especially when you look at the percent happiness, that consumer sentiment, for us, that's a real long-term indicator. And a lot of times when we see a big divergence between, one company with significantly higher happiness levels than another, that could be a sign of some market share steal. So that's definitely on our radar. But this is also a technology that, it's easy to adopt. And especially with advancements in AI, you can see where a competitor could come up fairly quickly. So while DocuSign is certainly the leader right now, and definitely when we look at just overall mentions, it definitely commands market share even across our consumer mentions. But I think that there is potential for some market share steal there from Adobe, so that's something that's kind of on our radar. I think one thing that DocuSign is doing, though, to kind of prevent this is it's beefing up and expanding its partnerships. It's trying to dip into healthcare. It's working on integrations with a lot of the digitization of healthcare records through software like Epic and Cerner, which I think is a smart expansion strategy. And it's also pretty integrated with Microsoft. And so I think that that's another thing that DocuSign definitely has going for it. However, if we're looking at, especially heading into this earnings, if we're looking at has that moved the needle yet? Have these expansion strategies? Is it paying off? We're not necessarily seeing that in our data quite yet. That's not to say that it won't in the future. We just are not expecting it this quarter.
Yeah, and to kind of expand on that, Megan, when I look at it, I look at the business environment at this point. Those small business loans are down. Tighter credit conditions. Are you guys seeing that from data that from other companies that you follow and have metrics on, that might be part of the reason? It might be a seasonality type of economic environment that might be slowing them down.
Yeah, I think that's a really good point, because especially when you think about the real estate market, that's a huge agreement area that DocuSign has benefited from, especially when people, during the pandemic, it wasn't just the digitization of business, it was people were moving and, needed to sign a lot of the agreements and things like this. So whenever you see these macro factors kind of pile up as headwinds against DocuSign, that could certainly be a cause for the slowdown in growth that we're watching. And that is something whenever we look at consumers who are talking about moving or talking about making large purchases and things of that nature that may require an agreement service like a DocuSign, those mentions are still tempering from those pandemic highs. So it's definitely it's a good place to watch, though, for if there are macro area improvements in terms of interest rates and things of that nature. That could be a big tailwind for DocuSign, but right now that's certainly a headwind.
All right, great stuff. Real quick, do you have an earnings score on this one going into the report?
Yeah, so we are cautiously bearish heading into this report. Our score is a -28. So, plus or minus 20 is our neutral zone. So this is just outside of our neutral zone. But, if we were to pick a direction, we would definitely bet more to the downside just because of that slowdown in growth that we're recording in the underlying consumer metrics.
All right, great stuff. As always, Megan, appreciate it.
Thanks, guys.
All right, that's Megan Brantley. She is Vice President of Research at Lightfolio.